Micron stock just crashed over 20% in a single week, right after delivering one of the most explosive runs we've seen in the entire market, climbing nearly 300% in the past year. And when most people see something like this, their first instinct is simple: panic. They assume the story is over, the momentum is gone, and whatever opportunity was there has already passed. But what if I told you this exact setup has happened before, and the last time it did, it created one of the biggest wealth-building opportunities of the decade? Because if you go back and look closely, this looks almost identical to what happened with Nvidia, right before the AI boom truly took off. And here's the part that should really make you pay attention. Back then, the majority of investors got it completely wrong. They saw volatility, they saw short-term pullbacks, and they convinced themselves it was too late, right before the stock went on to deliver massive gains that most people are still chasing today. And now, we might be looking at a situation that's setting up in a very similar way, but almost nobody is talking about it. Instead, what we're seeing right now is fear taking over the market. The Nasdaq is slipping into correction territory. Portfolios are turning red, and everywhere you look, there's uncertainty. And in times like this, most investors don't think clearly. They react. They sell too early. They wait too long. Or they completely miss what's actually happening beneath the surface. Because here's the truth. The market doesn't reward people who follow the crowd during panic. It rewards those who understand what's really going on when everyone else is distracted by fear. And that's exactly why you need to pay attention to this moment. Because while the price of Micron is dropping, the actual story behind the company is telling a very different narrative. One that could completely change how you see this stock. So in the next few minutes, I'm going to walk you through something most investors are overlooking right now. We're going to break down why this recent crash might not be a warning sign, but a setup. The one hidden detail from Micron's latest earnings that changes the entire outlook. Why analysts are quietly raising their expectations to levels that seem almost unbelievable. And most importantly, why this situation is starting to look dangerously similar to a pattern we've already seen play out before. And by the end of this, you'll be able to decide for yourself whether this is just another stock falling with the market, or a rare opportunity that most people will only recognize after it's too late. So, if you're someone who wants to understand where the real opportunities are forming before they become obvious, stick with me, because what you're about to see might shift your entire perspective. Right now, all anyone can see is red. Micron is down more than 20% in just a matter of days. And for most investors, that's enough to trigger fear instantly. When a stock falls this fast, the natural reaction is to assume something must be wrong. People start asking questions like, did the growth story break? Or is this the beginning of a bigger crash? But here's the thing that most investors don't stop to think about. Not every drop is a warning sign. Sometimes, it's simply the market reacting emotionally. And that's exactly what we're seeing right now. The broader market is under pressure. The Nasdaq is pulling back. And when that happens, even the strongest companies get dragged down with everything else. This is how fear spreads. One drop leads to another. And suddenly people are selling not because they understand what's happening, but because everyone else is doing the same. And this is where the biggest mistake happens. Investors start focusing on price instead of fundamentals. They see the drop and assume the worst without actually asking the most important question. Has anything in the business actually changed? Because if the answer is no, then this panic might not be a threat. It might be the setup. Now here's where things start to get interesting. While the stock price is falling, Micron's actual business is doing the complete opposite. Their latest earnings report wasn't just good, it was exceptional. Revenue didn't just increase, it nearly tripled compared to previous levels. Profit margins expanded significantly, and the company delivered record-breaking earnings across multiple metrics. But even more important than the numbers themselves is what's happening behind the scenes. Micron is starting to secure long-term agreements with major customers, including multi-year contracts that stretch as far as 5 years. This is a big deal, and most investors are completely overlooking it. Because what this really means is stability. It means demand isn't just strong today, it's being locked in for the future. And in a market that's full of uncertainty, that kind of visibility is incredibly valuable. But it gets even better. The company is projecting that demand for its products could actually exceed supply going into the next couple of years. Think about that for a second. While the stock is dropping in the short term, the long-term demand picture is getting stronger. And that disconnect is exactly where opportunities are usually created. Now let's talk about something that often confuses investors: the charts. Because if you only look at the short-term movement, it's easy to assume that Micron is in trouble. The stock has pulled back from its highs. It's trading below some key short-term averages, and momentum looks weak on the surface. But this is where perspective matters. When you zoom out and look at the bigger picture, the story starts to change. Despite the recent drop, Micron is still holding above its long-term trend lines, which suggests that the overall uptrend hasn't been broken. This is not a collapse. It's a correction within a larger move. And there's another detail that most people miss. The selling pressure is starting to slow down. You can see this in the trading volume. Earlier in the drop, volume was high, meaning there was aggressive selling. But more recently, volume has started to decline, even as the stock continues to move lower. That's important because it signals that the intensity of the selling is fading. In simple terms, the panic is losing strength. And when that happens, it often means one thing: the market is starting to stabilize, and smart money may already be stepping in quietly. Now let's bring in another perspective: Wall Street analysts. Because while retail investors are panicking, analysts are doing something very different. In fact, almost every major analyst covering Micron has recently issued a buy rating. Not neutral, not cautious, but clearly bullish. And what's even more surprising is their price targets. Some are projecting levels as high as $600 to $700. Now think about the disconnect here. The stock just dropped significantly, sentiment is negative, and yet analysts are raising their expectations instead of lowering them. So what do they see that the average investor doesn't? Because historically, when you have this kind of divergence between price action and analyst outlook, it usually means one thing: the market is reacting emotionally in the short term, while the fundamentals are pointing in a different direction. And this creates a situation where the price doesn't fully reflect the underlying value. Now of course, analysts aren't always right. But when you see this level of consensus, with almost no sell ratings, it forces you to ask a deeper question. Is the market underestimating what Micron is becoming? This is where the story becomes even more compelling. Because when you compare Micron to other major players in the AI space, something doesn't quite add up. Companies like Nvidia and Microsoft dominate the conversation. And for good reason. They are leading the AI revolution. But when you look at the numbers side by side, Micron starts to stand out in a very different way. Its valuation is significantly lower, with a price-to-earnings ratio that's nearly half of some of its peers. At the same time, its earnings performance is incredibly strong, in some cases even more efficient than larger companies. So you end up with a situation where Micron is generating serious profits, growing at an impressive rate, and still trading at a discount relative to the rest of the market. That combination is rare. And when you contrast that with companies that have extremely high valuations despite slower relative growth, the gap becomes even more noticeable. This raises an important question. Why is Micron priced this way? Is it being overlooked, misunderstood, or simply lagging behind in recognition? Because if the fundamentals continue to hold, that gap may not stay open forever. Now, let's talk about the bigger picture. Artificial intelligence. When most people think about AI, they immediately think of chips and processing power. They think of companies like Nvidia that build the hardware used to train models. But there's a critical piece of the puzzle that doesn't get nearly enough attention: memory. Because AI doesn't just need to process data, it needs to store it, access it, and use it continuously. And this becomes even more important in the next phase of AI, known as inference. This is where trained models are actually used in real-world applications, making decisions, answering questions, and interacting with users in real time. And unlike training, which happens in bursts, inference is constant. It requires ongoing access to large amounts of data, which means it relies heavily on memory infrastructure. This is where Micron comes in. The company is positioned right at the center of this growing demand, providing the memory solutions that power these systems. So while everyone is focused on the obvious leaders in AI, Micron is quietly benefiting from a part of the ecosystem that becomes more important as AI adoption increases. Now let's bring everything together. A few years ago, Nvidia was in a very different position than it is today. It was growing, it was gaining attention, but many investors still underestimated its potential. There were doubts. There were moments where people thought they had already missed the opportunity. But what happened next completely changed the game. The stock went on to deliver massive returns, far beyond what most people expected. And the reason so many missed it wasn't because the opportunity wasn't there. It's because they didn't recognize it in time. Now, I'm not saying Micron will follow the exact same path, But what I am saying is that the setup shares some very familiar characteristics: strong growth, increasing demand, a critical role in a rapidly expanding industry, and a valuation that doesn't fully reflect its potential. And most importantly, skepticism from the market, because often, the biggest opportunities don't look obvious in the moment. They only become clear in hindsight. And that's the question you need to ask yourself right now. Are you looking at Micron as just another stock that dropped, or as a potential opportunity that most people haven't fully understood yet? So here's the bottom line. This isn't just about a stock that dropped 20%. This is about how you react when the market gives you uncertainty. Because most people will look at Micron right now and see risk. They'll see volatility. They'll see a chart going down and assume the opportunity is gone. But the investors who win in the long run don't just follow price. They understand what's actually happening underneath it. And right now, underneath all the fear, you have a company with exploding revenue, record-breaking profits, growing demand from one of the biggest technological shifts in history, and a valuation that still doesn't fully reflect it. That's the disconnect. That's where opportunity lives. But here's the part most people don't want to hear. By the time everything looks safe, by the time everyone agrees it's a great buy, by the time the headlines turn positive again, the biggest gains are already gone. That's how the market works. It rewards those who move early, not those who move comfortably. So the real question you need to ask yourself isn't, is this stock risky? Because every opportunity comes with a risk. The real question is the market underestimating this right now? And if it is, what happens when that changes? Because when perception shifts, prices move fast. So I want you to think about this carefully. Are you watching this from the sidelines like most people will? Or are you paying attention to what could be building before it becomes obvious? Let me know what you think in the comments. How high do you realistically see Micron going over the next year? And if you want more breakdowns like this, where we go beyond the headlines and focus on what actually matters, make sure you subscribe and turn on notifications. Because the next big opportunity usually shows up when nobody's looking for it.